Good day, traders. I want to do complete analysis of CADJPY and make it clear why I have to take a long position on the pair. First and foremost, I want us to see the basic fundamentals on CADJPY. Let's first compare interest rates. CAD and JPY. Okay. Let's see if it will give us what we are looking for. Okay. Life rate forecast. Let's check this one. Okay. Can we see the information we are looking for? Let's go down. That's how I do it. Don't just take any erratic decision on your pair without looking at some of these fundamentals. I want to see the interest rate. The cross between the Canadian dollar and the Japanese yen is seen as a strong substitute for USD/JPY pair when a trader is wary of trading the US dollar. However, CADJPY is historically more sensitive to changes in market-wide sentiment. I want to check the rate on them. Okay, maybe we should do it individually. Interest rate on CAD. Okay, interest rate in Canada is expected to be 1.5% by the end of this quarter. No, what is it now? That's what we want to check. We want to see now. What is it now? Okay. Bank of Canada interest rate decision, actual 0.25 is 2022. This January is March. All right, this is the recent one. Yeah, this is the recent one. Previous one, and then right now is 1.5%. Okay, 1.5%. That's the rate decision on CAD. Okay, now just note that one. Let's go to that of yen. Let's change this one to yen. Let's change this one to yen. Okay, can you see interest rate minus 0.1? Can you see? So you can see the big differential between the interest rate on CAD and that of yen. Okay, that of yen is minus 0.1, while that of CAD is 1.5. You can see difference of about 1.4. It's a big difference. So what it means is that trying to go short on CAD yen means that you want to sell CAD against yen, knowing fully that CAD has a better rate on yen. What it does mean is that people, earn interest by, by keeping yen, by keeping CAD, and then people lose money by keeping yen right now, and that is why yen is sold off and CAD is a better asset to buy now. Now you have understood this basic fundamental. Now let's now go to technical. If we now go to technical, of course, every trader want to do top-down analysis. You want to start from the top and take it down. If you look at it, though, you will see that this move is an overextended move. All right. So to me, we need a corrective structure. We definitely need a corrective structure here, guys. Okay, we need a corrective structure, probably correcting down here before you can take a long opportunity. But remember when I told you I will be taking a buy on this, on a CAD and YEN, I said the trade is a medium-term trade. It's not a long-term trade. It's not a trade we are going to hold for long term. All right. It's a medium-term trade because overall direction on CAD and YEN is down. But I'm day trading this. I'm only day trading this. So if you come to 4 hours, you will notice something, guys, that you have big move here. This move is very sharp. It doesn't look too corrective. It's very sharp. So, and this one too is very sharp. So you see, sharp down, sharp up. This is the only part that we see a corrective structure in 3 waves. All right. So what does this mean to me? If I have a sharp down, which is an impulse, I have another sharp up, which is an impulse. Then the next move is now corrective. 1, 2, 3, correction. So what it means to me is that I have to measure to how much this move that is being corrected, to how much was it corrected. Honestly, it has even gone below 61.8. All right. For that reason, that correction is adequate. That's number 1. Number 2, I want to look at this 3-wave corrective structure. Are they of equal legs? I want to check whether they are of equal legs. And how do I check that? I go to trend-based, fib extension. I pick it from here to here, back to this place. Does it give me up to 100%? 100 to 123%? Yes. Look at it here. It has given us this here. So, to me, I believe we have equal legs here. And then this correction, this move to the downside is over here. Okay? So, if that's the case, then it means that for this structure to make sense, you must have another sharp up here that's equal to this length. You must have it here. Okay? And if you have it there, it then means that you already have 3-wave structure in the middle. Where's the 3-wave structure in the middle? You have this big A with A here, all right? And then you have small a here, small b here, and then you have C here, okay? And this A, B, C in the middle, this one should come. That's why my TP is 103. I want it to come here. So this A, B, C in the middle, this is a small A, big A. You have small a, small b, small c. So now, and at the end of this C, you are going to have with B. Okay? With B here. You have to use another color for this one? Yes. You have with B here. You have with A here. With A here. Okay? Now, this with A that comes here, we must have C here. Must have C here. Okay? So this is with C. A, B, and C. Then you can expect a move to the upside from here. You can expect a move to the upside from here. All right. That is my expectation on CAD YEN. Okay. And that was why I took a buy opportunity from here. But then I knew that I was not taking this trade in New York session. Okay, if you are taking this kind of trade that have yen, you must have to wait for New York before you take it. But honestly, I was going away from my office, and I don't know when I was going to return, and this is the only trade I plan to take for today. I don't want to miss it. So that was why I took this trade in the morning, but I made sure that my stop loss is not less than 50 pips, because I know whatever happens, CAD yen is not that aggressive. It's not supposed to hit my stop loss. I don't expect it to go below this level. If it goes below this level, the analysis is invalid. However, it can make a structure like this. All right. It can make this kind of structure this way, can come this way, come this way, come this way, come down before it goes up. Yes, let me clean up this. Can make this structure. Yeah, possibility for this structure. The possibility for this structure strongly exists. Why? Because from here, right here, is a big supply zone. All right. So the market will definitely react when it gets here. And the reaction of the market will depend on the market situation when price get to this price level of 101. That's the whole number here. I expect a reaction to happen. Okay. And this reaction that I'm expecting here might lead to a breakdown to the low, to break this low and then move to the upside, or the reaction might lead to a corrective structure here. And if it leads to corrective structure here, beautiful. From here, we'll take it to the upside. But in any way, or at any rate, I expect this move to the upside to clear this high, possibly clear this high before we move down. So that's why potentially I expect a 300 pips move starting from 100.0 to 103.0, right? Because we see that even though the overall trend is down and we are right at the top, but on a smaller time frame, we are not ready for the downside. There will be some move that will take place. This market will be sideways for some time. All right, to be sideways for some times before we begin to pull to the upside. But for now, let's keep checking this move to the upside. And why did I suggest that there's possibility of this market making a corrective structure here and come down? The reason why I have to suggest so strongly is because this area, there is no divergence. All right, there is no divergence, okay, between this impulse and this impulse. So for the mere fact that there is no divergence, make me to believe that in that case we should expect maybe a move to this level and then another move to the downside. Okay, then after once this low is broken, then we now expect the bigger move to the upside. But for now, let's see how this move will play off. If it comes to this place very strong, then expect it to continue to go up. But if it does not come too strong, if you come to this place too corrective, okay, if you come here correctively, then you know that another move to the downside is coming, because this is a very strong area of supply. Just like, let me show you something here. Just like when you had this correction come this way, I already expected and told as many that care to listen that this area here is a big supply. It's a big supply area. I expect reaction between this box. Can you see? You see it? You see this green candle, this candle before this big imbalance candle, and you see the one that formed after it. Between here and here, there was excess supply over demand. And then between this price range here and here, in future, there will usually be a reaction. That is the reaction you have gotten here. And then what I normally do is to look at psychological level between this supply zone. I will look at whole number level. Look at it here, 101.5. This is a sub-psychological level. You see another one here, 102. So between 101.5 to 102, okay, something must happen. Do you see here? You see why I told you that CAD pair is a New York pair. Can you see this green candle? 14.00. 14.00 in my time zone here is 9 a.m. in New York. All right, 9 a.m. in New York. This is stock market open time. Do you see after this green candle? Boom, red candle. Okay. Do you see that the market tapped this supply? 102.0. I'll show you here, guys. 102.0 here. He tap it. This is where bank position their orders. This is where they position their orders, guys. He tap it, and as soon as they tap it, what happened? Boom, to the downside. Let me show you another one. Do you see there was big supply here between this candle before this big one and the one that formed after it? This is your setup. Boom, that is the supply. So once price get there, you now want to find out where is the psychological level or sub-psychological level around that place. Look at it here, 101.5. That is sub-psychological level. What happened when market price got to that place? Boom. Let's check what session is that. That is a London session, 9 o'clock. Boom, to the downside. So this is how you analyze CAD and YEN, and this is how I came up with my analysis and my buy idea on CAD and YEN. Somebody was suggesting in the morning that maybe because of this engulfing, partly yes, partly no. Yes, in the sense that as soon as this market got to equal leg, okay, as soon as it made equal leg of this correction, boom, boom. Can you see in between 100% to 123% retracement? Do you notice there was a massive reaction? This is a reaction that tells us that there is greater probability for this move to the upside to occur. So if you have such a very good and clean engulfing candle in 4 hours time frame, what I will expect is to fill this candle and expect the market to come back to 50 to 61.8. So if you measure 50 to 61.8, it's here. All right. So if you go to 15 minutes time frame and see what the market is doing around that level, can you see? Fantastic. Can you see? Fantastic. You see the reaction? Market came down to that place, reacted up sharply. All right. I knew this down was going to come when I entered this market at 100.17. But my take as at the morning time was that this move here had already done the retracement, and because we already kissed this 0.5 to 0.618, I was expecting that this was going to be the move. But what happened? It still came down. It has taken the low, grabbed liquidity. This is the end of London session reaction to this low, and then what do we have? You have this move to the upside. So right now, I do not expect this market to break this level. I do not expect the market to come below 99.8. If you go below 99.8, I'm not interested again, but I do not expect it. So I expect this to continue to go up correctively or impulsively, whatever be the case. So guys, that is my whole analysis on CAD and YEN, and that was why I decided to buy CAD and YEN. Finally, the fundamental analysis, taking consideration of their interest rates, you are having 1.5% on CAD, and then you have negative 0.1 on what? On yen, difference of what? 1.4. No investor will want to keep yen right now. Every investor want to keep what? CAD against yen. Okay, we want to keep CAD against yen. So for that reason, anytime this one hits daily support, you look for a better trade there. I do not suggest that we buy it here. I do not suggest here. I only suggested here after I see that theoretically we have met our guideline theoretically for a move to the upside. Can still be plain here, but if you break this level, 199.60 to 99.80, if you break it to the downside, the setup is invalid. But for now, the setup is very valid. All right, guys. Thank you very much. Bye.